Hi guys, welcome back. We hope that you've been enjoying some of these things. We appreciate you taking some time with us to learn about some investing topics. Today we're going to talk about income statements. You may have heard that it's earnings season if you listen to the financial news at the end of when the market closes each day. There are several companies now reporting what their income is for the quarter, their earnings. It's earnings season. And Lowe's just reported theirs, and you can see here that there's some exciting things for Lowe's. Their stock is well on the rise, and so are their sales. You can see 30% increase in their sales. It talks about their margins, and you even get their earnings per share, and you can see some other nice, well pictured information here that somebody packaged all together. Now, where did this information come from? Well, companies that are public companies, are required to file quarterly reports with the SEC. So these are called, there's several things that go into their quarterly reports, but today we're going to talk about the earnings or income report. Sometimes this report goes by different names. Sometimes it'll say the statement of income or statement of earnings or statement of operations. They're essentially all talking about the same thing. Their profits, their earnings, their income, those are synonymous here. So I have a few companies that I've pulled up. Lowe's, which again I said I don't own any of their stock. And then I have Microsoft and Coca-Cola, both of which I do own some of their stock. We're just going to look at some of these numbers and figure out what they mean and how they can be helpful for us. So this is in millions. So you can see for Lowe's ending July 31st that they did essentially $27 billion worth of sales. Now on Lowe's it says net sales. If we go to Coca-Cola, this top line here is going to say revenues. Revenue is the money generated from what a company sells. It doesn't necessarily mean their receipts, because they might not have received the money yet, but they have sold that and they have a promise from somebody to pay. So that's revenues, or in the case of Lowe's, it's net sales. In the case of Microsoft, they call it revenue as well. And then those can get broken down into different types of revenue. You can see that for Microsoft, they call it product, and then service and other. For Lowe's, they just call it, it's just net sales. So this is how much money a company generated from their product. And then the next line here tells you how much it cost for them to generate that product. So they had $27 million worth of sales, but to generate that, it took almost $18 billion, 27 billion and 17 billion. So if you take this top number, you subtract this number here, you come up with $9 billion. So that was their gross margin. So Lowe's calls it gross margin. Coca-Cola calls it gross profit. Again, they're the same, but you'll see different names sometimes for these things. Again, for Coca-Cola, you take what they made and sold it and how much it cost them to make that, and you come up with $4 billion is what they had. That's their gross profit. Now, gross profit, while nice, doesn't quite tell us as much as we need to know about the business, because companies have other expenses. So you'll see this line here, selling, general, and administrative. They're paying employees, they're advertising, different things can go into that, but there are other expenses that companies have. Could be their benefits, etc. You take for Lowe's it was $5 billion, and then there are some other different expenses that go into running a company. So their equipment can depreciate just like your automobile can depreciate, and sometimes they're going to spread things out over a number of years for the amortization. And for their quarter they had 327 million. So you take this number, their gross margin, or Coca-Cola calls it gross profit, and you deduct this number and you come up with the operating income. That still tells us quite a bit, but there are other things that still go into whether the company's making money or not. So one of the things that it can cost a company is when they're borrowing money. So say they're paying interest. So in this case, Lowe's paid $219 million in interest. This gets us down to their pre-tax earnings. How much money do they actually make before they pay taxes on it? So for Lowe's, $3,738,000,000. Of that, they're going to have to pay $910 million. This gets us down to their net earnings. All right, here's how much money they actually made. After the cost of all their doing business and paying their taxes, that's how much money they made. Coca-Cola calls it consolidated net income, but we're talking about the same number, okay? If we get to Microsoft, they call it net income. Now, companies will take this number, their net income. The way we get, oftentimes what we want to know about is their earnings per share. How much money did they make divided by the number of shares they have in their company? So you'll see that there's two different numbers here. There's this basic and diluted. So basic is essentially divided by the common stock available to their shareholders. Then they have this diluted number. There are some other different obligations that companies might have for shares. There's something called a warrant that a person has an opportunity to buy shares before a certain date at a certain price if they want to. There may be options available to people. And so that is going to dilute some of this a little bit. So you can see that their earnings per share was $1.48, and when it gets diluted, it's $1.46 per share. If we go to Lowe's or Coca-Cola, we're going to see similar things there. You can see their basic earnings per share, and when you dilute, they didn't really dilute by very much. You can see this number only changed by $1 million. So that really didn't have much effect on the earnings per share, and it was still $3.74. And then in this case, Lowe's reported out how much of a dividend they paid. Now, the nice thing about this report is you can see that it shows you what they did last year for the quarter and for the 6 months ending at these respective dates. That helps you make some comparison. How's the company doing? Well, wow, you can see they sold a lot more goods during these 3 months this year than they did during the same 3 months last year. You can also look at some of their expenses, particularly the selling, general, administrative. So these are some numbers that the leadership for a company can really control, and it gives you a rough idea of the efficiency of the company. We can also compare this, so I should say efficiency of management. We can compare these as well. So even though they spent more money this quarter than they did the same quarter last year on these expenses, you can see that as a relative expense, the percentage went down. So they did $27 billion worth of revenue, and this selling, general, and administrative is 18% of that. Hopefully that makes sense for you. And then you can compare that so that you can see, wow, they did better percentage-wise. And then for the 6 months, you can see, again, doing better. And the fact that this number for the 6 months is higher than the number for the 3 months, you'll know that, oh, not only did they do better during this 6-month period, but they also did better than they did, the quarter that ended March, because that's how this number, this is an average of this plus whatever they did in March. So that gives you an idea of some of the efficiency of the leadership of a company. Now, there's a lot more that goes into earnings season besides just the income statement. That's all we're going to talk about today. But other things that go into earnings season that we'll talk about the next time. So here's Microsoft, their income statement. There's also something called a balance sheet, and then there's something called cash flow statements. So we'll talk about those next time and how those numbers might be helpful for us as we're investigating whether we want to buy a company's stock. Hopefully that was helpful for you. I hope now when you see these earnings season reports coming out that gives you a better idea of what you're listening to, and I'll talk to you later. Oh, and don't forget, if you have any comments, feel free to leave those, and if you like what you're hearing, then please subscribe. Thanks.